Wowee, Blue Apron's getting absolutely decimated today. There is no debating. No debating. This poor guy, I told you to get out of it. Um, they reported earnings yesterday, and that was pre-market too, which is crazy. But we're seeing the reaction today of investors getting out of this piece of garbage. Um, my gosh, this thing is. I warned you. I warned you. I mean, we just look at the history of this stock. Let's look at the max since IPO, which um, lofty IPO in 2017. Ooh, it's down 98% since then, since IPO time. So, what do you want me to say? In the past year, it's down another 85%. What do you want? What do you want me to say about this stock? I told you to stay out of this thing, but I hope you did. Otherwise, the money will have been lost. Good golly. Good golly. Let's look at what's going on here. Well, first we got to look here why I don't like the stock. Well, you see here, 2017 was a good year for them, right? That's when they IPO'd. And since then, we've seen a decrease in revenues. But we've also seen, a garbage net income line at the same time. That is rough. That's a money loser if I've ever seen one. They are losing money hand over fist. I don't like that. Let's get into this earnings, though. First, before they released their earnings, they went ahead and released evaluating a broad range of strategic alternatives. Alternatives could include the strategic business combination, a capital raise, a sale of the company, or some combination of the other. So, basically, they're saying the company's dead. Let's just be frankly honest. What they're announcing here is that the company is just not going to last. That's frankly what it is. A strategic alternative means they need another aspect to do their business because this isn't working out. So our strategic process, together with our cost optimization initiatives, is intended to best position the company for the future, including to support our growth strategy. So pretty much they're saying someone better buy us or we're selling out. Otherwise, they have to raise capital. Um, Sales fell 33% year over year too. Gosh, look at this. Look at this. Blue Apron posted a GAAP EPS of negative $1.66 per share. That's ugly. Revenue of $94 million only, down 33% year over year. They missed by $3 million on that too. They even missed the estimates, which were planning on making them going down 30% a year. Gosh dang, that sucks. That's horrific. And you think about, other people in the market. So Blue Apron is a service that pretty much provides you groceries to your own shopping. There's plenty of other services out there now, and Blue Apron, sorry, you're getting left by the wayside. Let's take a look at some of their specifics here. Yikes. So in this quarter, they went ahead and lost 22. That's right, $22 million. Lost. Gotta hate that. Just they can't even fake a gain. It's all loss. This is all they really wanted to show me because that's how disappointed they are. Let's just be fair. That's all they want to show you for their slides because you don't know what? They're kind of a piece of garbage. So even if you look here at this transcript, do we see anything fun? We don't. They made this one short and sweet. So combination of capital raise through public or private markets, a transaction that could result in private ownership or sale of the company, and support the future growth of business. They don't have anything to say. What do I have to say about this even? They can't even own up to their investors. They have duped the crap out of them by IPOing here. It's ridiculous. This is the textbook of an IPO gone bad. Textbook definition of an IPO gone bad. And it happens quite a bit. Garbage company, money losing company. They're not sustainable. They went IPO to get some more money. Now they're at the point where they're either going to have to sell out the business or they're going to have to extremely raise capital. And even then, when you're declining revenues 40%, I don't know who's going to invest in this company. Is Uber Eats going to buy it out? I mean, Uber could buy it out, I guess. They don't really have the capital to do it, but if you think about competitors, um, maybe a company like Walmart could consider it. I mean, maybe. I don't think they should, but um, just to initiate, they already have a grocery delivery business of their own, so really, do they need a company like this? I don't think so. Um, the main thing here is that obviously the Blue Apron will give you recipes and stuff like that, but I don't think it's a service most people need because most people who are getting stuff delivered, they don't necessarily care to make their own food. It's my opinion on the matter. It's about making things easy. So if I'm gonna make my own home cooked meal, I'd like to buy and source my own ingredients personally. That's why I'm not a huge fan of Blue Apron, but still, this is like they can't even say anything to investors. They're just saying, "Hey, we're losing money hand over fist, guys, and we're going down." I warned you. I think Blue Apron's a piece of garbage. Stay out of this, please, please, please. I'm sorry, everyone that is invested in this. This stock's going to continue to go down as they try for anything, a price offering. I could see it going up if someone tries to acquire them, but I don't know who in their right mind would want to acquire this company at this point. There's plenty of other services out there that do just what this does. My goodness. Sell the stock.